Good morning, everybody. It is the Cowboy, and V the Gorilla will probably join us this morning. I haven't heard that he won't, so unless he's unable to, we'll see him shortly. And yeah, got some pretty quick things to talk about. I'm gonna pretty much jump right into the content. But if you are watching this on YouTube, please like, subscribe, notification bell, all those things. And if you're watching this not live, go ahead and leave a comment in the comment section. It helps us out in the algos. Here is a QR code. Come find us, www.algofactory.tech. You can find out who we are, what we do. Long story short, we help people become traders and build algorithms. We don't give investment advice. Okay. So I'm going to leave this up for a minute, but I do want to jump straight into the content. Ray in our private group is mentioning that there are some big moves happening in FX markets coming from Dixie. That's the DXY and the 10-year. Mikey, we don't. That's not something we handle as far as setting up trust funds. That's outside of the Algo Factory wheelhouse. However, somebody in here might have some data for you. So we'll see if we can find somebody to talk to you. That's certainly not the kind of advice that we give any advice, really. We just talk about the nuts and bolts of trading. So let me respond to that in here. I know Gus over at Perpetual Assets, I think, may have some information on that. But I'm going to drop the QR code here. I'm going to start sharing the screen, and we're going to take a look at the markets. Yeah, a big move. This what we're about to see on the screen here, as I go ahead and zoom in and start to share it here in a second, is why I will not generally trade prior to economic data, right? Because I was looking at the market here, and let me share this really quick. Give me a moment. Okay, so there's the screen. Let me expand this screen here. We're looking at a 30-minute chart. Okay, so this is a representative. Each of these candles is 30 minutes of price action. And basically, if to look at all the metrics, price wanted to continue down, right? But you're looking at this current candle right now, and the unemployment data just came out right 6 minutes ago, right? So we started just a tad late this morning. Apologies, but that does happen. So this data came out and crushed price upward. Again, the metrics were wanting short term down, but when you get this, everybody is thinking, okay, perhaps they're using some form of algorithm or trading or whatever that is. And he's like, okay, I'm going to bet on the price going down. And then, of course, something like this happens and price goes opposite to what a lot of people did. So, we've talked many, many, many times about why I don't trade prior to news coming out or try to bet on news or anything like that. I will say that if there is a way for you to profit on that and you can backtest that and it's proven to work over time, then by all means, do it. If you can backtest all these news events and you can say, I win a certain percentage of these, and you can measure out how to win at that game, by all means do it. But unless you have done that, you're pretty much just gambling. Okay. So give me 1 second here. Okay. We got Jay Martin in, rocking. Good to see you in there, Jay. Thanks for coming in and hanging with us. But yeah, we're looking at unemployment data. So this means that the unemployment had weak dollar. That means unemployment probably came out higher than expected. And we'll go ahead and refresh the screen, and the number will probably be red. Unemployment claims 231 over 221. So you're looking at about a 5% above what they were expecting. So, of course, that's going to mean weak dollar, which means anything against the dollar will look strong. And this is why we see the euro against the dollar popping up like it is. I don't know that Bitcoin would be so affected. Sometimes it is, sometimes it's not. The unemployment data it's a weekly metric. Bitcoin was kind of on its way down. So at least in the short term kind of look right here, going back through last night. So basically, you're looking at last night and yesterday. So I mean, look, you got a little pop up here, but it's not really affecting Bitcoin so much. And again, you're looking at the 5-minute chart right now. Gold is seeing a pretty big effect, and gold is measured against the dollar, so you are probably going to see a pretty notable effect on gold when it comes to news. And let's back off because I think what Ray is talking about might be more easily seen on the 30-minute chart. Some pretty hectic moves on gold right now. I think I was expecting gold to fall. Well, no, it hit my targets in that low 30s. So yeah, but look at these moves here. You got these strong kind of moves. There's been a lot of data coming out the last few days. There's CPI, PPI. So I imagine that's why we're seeing a lot of these moves right as data comes out. 630, 730. That's very expected. So these strong kind of moves are very expectable, very expected, and hard to trade. And I can show you in gold, especially like even though price went down. Let me show you this. Okay, even though price went down yesterday, morning's data, PPI, it actually spiked up a little bit first and knocked out some stop losses. And here, when the CPI was announced the day before, right at 6:30, price actually went down before it went up to knock out stop losses. So to try to play these breakouts and get in before the announcement is a dangerous thing. But I mean, you might be able to go through history and kind of look at, how this happens, what the metrics look like. Oh, it usually goes down this percent, and you can measure out a way to make that work. I'm not saying it's impossible, but I haven't had a lot of success. Let's put it that way. And I've tried a lot of different things. Dos Tacos says Jay Martin. Yeah, Jay, always good to have you on. So hopefully we can see you in Algo Factory sometime soon if you're not already in there. And I think you're not one of us. I mean, you're one of us. Don't get me wrong, but I don't think you're in the private group just yet. So either way, though, we're seeing it across the board. The Swissy will be in the opposite direction. Of course, you'll see a poke downwards on the Swissy. So it appears that look, the move up from CPI was actually strong and sustained. So if I were to go ahead and move out to the 3-hour, we could take a look at CPI, which was 2 days ago at this time. And we'll go back to the euro because it's just where I tend to look at everything. And let's look at a cleaner chart. Let's see, 3-hour. We'll go on the 3-hour. So CPI, let's see, we're looking at November the 14th. Here it is. So here's your CPI announcement right here, right? Because that's right. And this move hit hard on the way up. And if you look at the high time frame, price was already about to flip upwards, right? So you had this big move down, and then you had this consolidation, and then you have this move upwards that had already started. So CPI supercharged that move, and I don't think that's done yet. I think that this could be the beginning of the next move up. In fact, one trade that could be taken is like so. It's a little late to get in. I mean, you could look for like a pullback and try to take advantage of that structure, or you can wait for a break of this top structure. But I think it's likely, here's the fib levels where price might go to. Oh, great, Mikey. Cool. Nice. Yeah, I think I remember you. You had the Mikey, I'm talking to Mikey through a private message in our private chat. Mikey, you had the like the Mikey Life Serial Mikey thing, right? Like that was your avatar. Mikey, I think he likes it. Give it to Mikey, he'll eat anything. All right, so you got some structure right here at this 272. So to go long at this point, price may have a hard time getting above that line that I drew because you got a 272 fib extension level. Maybe we'll talk a little bit about fib extensions on our show today and kind of show people how that's done. But I'm able to kind of use a certain tool called the Fibonacci tool. And there are fib retracements, fib extensions, and basically it measures prior moves and it uses what are basically magical numbers that exist in the universe already. I don't know how it works, but it works. I don't know if it's self-fulfilling prophecy. I don't know whether or not that is a real mathematical thing, human nature. I just don't know what it is, but I do know that they tend to work. Okay. And when I say self-fulfilling prophecy, it's because if everybody thinks something will work, then it'll work, right? Perception's belief, belief is reality. So long story short, though, you do have some structure, prior structure. You see that Roman numeral 3, and that is right below that fib, and that is if that's probably where price would go. So if one were to actually take a long trade, and if their metrics said they could take it now, then it's like I said, a pullback would be nice, but I think the higher time frame really may not give you that chance. Um, but one could have a trade that looks something like this. I mean, it's better than a 1-to-1. It's like a 1.2 to 1. It could be prudent to, I mean, look, one could enter now if their metrics said that they could. One could also hang back and look for a pullback. And as long as metrics still said that it was okay to take along, like whatever your algo is, whatever your trading methodology is, because people hear algo and they think computers, and it's not a big deal. Algorithmic trading is how everybody trades. Like, unless you're just throwing a dart at a wall, like if you have any kind of methodology whatsoever, it's an algo. It's a fancy word for a trading method. But if we did get a pullback and the metrics still said go ahead, then this could be a nicer trade to look for that pullback. And most people probably would wait for the pullback to flip before they got in. Just look like a better than a 2-to-1. One could split the difference if they really wanted to get into this trade now, and get in here and just ride it up. And then if there's a pullback, add to it. It's always a way to go. Because what could happen here is that it could flag up. And what I mean by flag up is that price could actually kind of continue in this sort of flag until it's ready to break out. Okay. So unemployment is it's a weekly metric. It's a week number, WEAK. It's a weekly metric, WEEK. And so because it's not like a monthly metric or yearly or whatever that is, or quarterly, it doesn't have quite the same effect. However, to take a look at my algo, and I'm about to put some stuff on the screen for all you new people, don't let it scare you. I'm used to looking at all of this noise, and I don't use all of it. A lot of this is experimental, but I can tell you that the higher time frame is bullish. So there's a decent chance price is ready to continue upwards. So a move up is in the cards. One way to also play this would be to look for price to break this resistance, right? And as it breaks, one could actually look for a small pullback and then take that trade. An example of this would have been like back here, and I'm going to use the replay function. So this is a pretty good function on TradingView. I guess replay is not available, huh? Look at this. There it goes. Okay, we just had a temporary glitch, but it's back in business here. So we'll go back in time, and we had this pop up. Metrics were overall bullish, but if one were patient, one would have gotten into a better trade. So let's pretend we're in a similar scenario to today, right? And we'll go ahead and go one bar at a time, one candle. I would say bar because it's old school. I don't know why I say that. And somebody might have gotten excited, right? And said, okay, I'm just going to go like right here, right? And then my stop loss is wherever, down here. And then I'll try to take profit up here, right? Well, if one were patient, we could see that there was a pullback. And then perhaps somebody might have gotten in down here, right? And that's a 2.5 to 1 risk to reward ratio instead of like a 1.5 to 1. And what does that mean? With a higher risk to reward ratio, you make more money. So in trading, what we do is we have a place where we will get out of the trade if it looks like it's going against us, because you have to cut your losses. If you don't cut your losses, you lose all your money, and you can lose all your money no matter what you do. It's possible, but we use something called money management. We teach that over at algofactory.tech. Here's the QR code. And that's just a methodology in how to kind of make sure you're not losing your money, or at least you do your best to make sure that you don't. Again, it's not investment advice. It's just a methodology that we use. So you can kind of take a look at what we do, make your own decision. But there's the QR code, www.algofactory.tech. Zap that, give you 10 seconds. So as this goes down, one, could see, okay, look, this might be a better place to enter. And if your methodology says you can enter right there, then you get a 2.4 to 1 instead of that 1.4 to 1. And what does that mean? Well, a 1.4 to 1 means that if you're risking $1,000, then you're making 1,400, which is great, right? But a 2.4 to 1 means if you're risking $1,000, you're making 2,400. Or let's just say if you're risking 100, 2.4 makes you $240 instead of a 1.4 that makes you 140, given that the trade goes all the way to your exit, right? So your profit exit, that is, right? So, being patient in trading is key. I would say one of the biggest, most important aspects of a trader is going to be patience, right? So, we did have this breakout right here, right? Now, if one entered here, there wasn't really much of a pullback per se. It actually has happened here. So what may, be the case is that we get another pullback before it breaks this recent high, right? So perhaps, here's my line here. So perhaps we see price action pull one of these and then come back down and give us an opportunity to get a better entry. That could happen. It could even go lower. We don't know yet. I don't think it will. And then of course, you can go to your targets. Risk to reward might look something like this. You get in just a little bit lower, a little more room to make some cash. Or perhaps what may happen is price is ready to break out. We miss that opportunity. The opportunity never existed for a pullback, and price actually breaks out, right? And then pulls back possibly on the way up. And then what we could do at that point is go long and then use this structure down here as kind of our basis for a stop loss, right about, say, here, or even a little bit, the structure, newly created structure right there, as that bounce happened, would give us an opportunity for a tighter stop. And then we would have a nice, 2.15 to 1 ish, right? So it's a way to, it's just a way to look at things, right? And patience is key. If things are bullish, right? If things are headed up and to the right on the chart, then I do like to look for pullbacks. Now, pullbacks may not happen. That means I missed an opportunity. That's fine. There are infinite trades virtually, right? There's always going to be another trade. Okay. So let's talk about a fib extension and how that works. So we'll visualize this on an uptrend. Okay. And I'm going to do this with like a design and drawing. So here we go. To create a fib extension, what you have to do is measure a completed part of a trend, right? So let's just say you're on an uptrend, or price is on an uptrend, and you want to measure how far price might go up, right? So on this uptrend defined by higher highs, higher lows, right? What we can do is use what's called the fib extension tool. It's on the far left under these tools. There's a whole one dedicated to Fibonacci, and you go to trend-based fib extension. Now, I have manipulated my fib retracement tool to be an extension tool, but we're not going to get that deep. I've showed everybody in the private group how to do that. It saves a lot of time. But what I do is I look at a prior move and the impulse that I'm looking at, right? The move up that I want to measure is going to be this move up. That's the move up that I want to measure. So with my trend-based fib extension, I start at the bottom of that move. I don't have to be right on it. I could be to the left or to the right. So I'll go to the left, and I'll go from the bottom to the top. You see that dotted line kind of measures it for you, right? And I click, and then I pull it back down to the bottom. I can go back here, it doesn't matter, as long as that dotted line measures up. And then what we're looking at are these points where price may go to. Now, there's other things we want to look at. We want to look at old structure. There's some other tools that we use, like a fixed range volume profile, but that's not necessarily part of this discussion. We're just going to talk purely about the fib extension. So what we do here is, as price comes down and we have an indication that it's bounced up, maybe you're using, price action, maybe you're using order blocks, maybe you're using an algorithm of some kind, and you have determined based on your own methodology that price has reversed and will continue up, and you want to make a trade based on that, then what we can do is we can go ahead and enter our long, maybe right here. You set your stop loss based on however you set stop losses in your algo, so maybe it's like right here. And then price with the fib extension, the theory here, and it's well tested, it's used by a lot of people, is that price will go to the 1272 and the 1618 before the extension is done moving. And the 1618 is called the golden ratio. Price generally will go to that, not always, but that's historically a good bet. And it's going to depend. Like when you're actually testing these algos out, right? You got to go back through time and see how your particular whether it's a currency pair or a stock or a crypto, whatever it is, you have to measure how things generally behave. Okay. Morning Mav Bet, thank you for coming on in. And Lisa too. It's good to have you all both in here. Some kind words from Lisa Gray real quick. Thank you for that. So right now, price has a probability of heading up to the 1618. So the way I might handle this trade, if I did feel, if my indication was that the uptrend was intact, kind of like I think it is with the euro right now. I mean, I need to really look at those metrics to be sure, but the last I looked, that uptrend was intact. So we could have a move all the way up to here. And had we gotten in at that reversal time, then we would be able to possibly take some profit off right here at the 1272, maybe just a little bit before that. And then right before that 618, like you could take it off at those levels, but I think a lot of people are going to also do that. So I tend to front run them. That being the case though, that's a 6-to-1. I mean, it might not be that pretty. Those 6-to-1s are uncommon, but like a nice 2-3-to-1, that can be done on an extension like that. So this is how that's done. And again, if you want to know more about how to do that, and we are at the end of the pretty much the end of the free to the public, I'm gonna let it go a little bit longer because we started a little bit late. I actually couldn't find my water. I left it all the way across the house. Had to go grab my water. Got me started a few minutes late. So I'm going to throw the QR code right up here. Okay. And then I'm going to go ahead and show our website just a little bit so you all can see what you're kind of looking at here. And I'm going to zoom in. So we have a set of classes that the Grill and I have created. Okay. And those classes are at the bottom of the website here. And it's, I don't know, dozens of hours of classwork, right? You have the essentials course right there. You have the algorithmic structure course, which actually, the essentials is sort of the nuts and bolts of the basics of trading. And there is going to be, we have a private room, a Telegram room where we're in there, and we're oftentimes in there at weird, all hours of the night kind of scenario. Not all hours, but I trade, I was up today. I've been up for more than 3 hours. Like if somebody had questions that was trading, maybe, over in Europe or something, I could have easily answered it, or like Australia. So, we're around. So as you go through this essentials course, you'll probably have questions because trading is a very broad subject. To try to create a 100% comprehensive video as far as how trading goes, there would be like thousands of videos. So we give you the very basics, and then we help you find whatever questions you might have. It might help you find those answers, or give them directly to you, or say, hey, here, go check out this video, or ask YouTube this or that, right? So we're here to guide. And then, of course, the algorithmic structure course, which is the foundation of how to build an algo. And it sounds complex, but it really isn't. So, algorithmic structure, people think it has to do with supercomputers and you got to have somebody coding, and it's not like that at all. It's just a basic way to trade based on conditions, and you create your own conditions, and you don't need a whole lot of money or coders or anything to create that. And then you have the operations course, which actually helps you treat your trading like a business. This is where money management comes in. This is how you can see how I personally will, I'll make sure that I don't lose all my money, right? I'll put some safety precautions in place to really minimize the possibility of losing my money like that. And then there's the ethos course, which is trading psychology. And I'm going to give you the dirty little secret about trading. Look, most people's failure is psychological. I would say everybody's failure in trading is to some degree psychological. What'll happen is, in most traders I've seen who kind of come in and out, what they do is they go in and they find some guru, and then they start using that guru system, and then they maybe have 4 or 5 bad trades in a row, and they're like, screw this, I just lost all my money, I'm out, right? I just lost half my money, Here's the problem with that. It does not matter how perfect your system is. You could have the best trading system that ever existed, and you're gonna lose trades, and there's gonna come a time when you get in a bad streak. And that could be just bad luck. It could have to do with some strange market conditions, but you will have a bad streak. Everybody has it. I don't know a single trader who hasn't. Okay. So if you know a trader who has never had a bad streak, I want to know who they are, and I will pay a lot of money to talk to them. because they don't exist. I can almost guarantee it. So that being the case, if you have developed your own algorithm and you've gone through the process that it takes to develop that, the back testing, the forward testing, and that algorithm has to do with your personality. Your own personality is basically going to determine the kind of trading that you do. Once you've done that, even though you just lost 4 or 5, 6 trades in a row, the probability of the win. You've gone back and done so much testing that you're like, yeah, these streaks do happen. You know that they're going to happen because you have seen them happen in your testing, and you don't get discouraged and you continue to trade what is a really good system that you spent a long time learning and building. So really the secret to trading, I think, just my own opinion here, is that if you develop your own methodology and you use our development method, right? That will give you that psychological edge that one needs in order to not end up giving up, right? In order to just kind of not throw in the towel, say, hey, I just got a bunch of bad trades. This is BS. I'm out of here. No, you've gone through the process. You understand to a statistical degree of certainty what your method is going to do. And those losses happen because you've seen it before in your testing. All right. So that's the big secret. And that's the dirty secret to trading. People don't tell you this. They tell you, use my method and you'll become rich. Be rich in 6 months. You'll make this much money. You'll double your. No. It's not like that at all. First of all, there's no guarantees in trading at all, ever. If you're, trading, it has that element of risk. But what we do is we use the scientific method to dial back that risk to something that is statistically predictable. And once you have that, and once you know what that is, then you can operate on that precept, right? So that's how this works. Come join us. Zap that QR code. Please come check us out. If you're new, you can always ask questions in the chat. Like, let's just say you're watching YouTube for, live or whatever it is, like you are right now, right? If you are, or let's just say it's after the fact, you can leave comments, say, hey, I want to know about this. Hey, I want to know about that, right? And you can always go to our website. You can send us, messages through Contacts Us. Our team is very responsive. At any rate, though, we do want to go ahead. We want to thank you. We're going to hop off of the free to the public YouTube. So come visit us. And in the meantime, I'm going to go ahead and hop off here. The gorilla hasn't joined us yet. And I haven't heard from him that he isn't going to join us. So I imagine we'll be seeing him. Usually he's in here with us. And I know today is usually the day we get the drips today. So Via the Gorilla works at a high level. He does a lot of deals with people around the world. So he gets a lot of information on what's happening geopolitically and economically. And he'll share stuff with us before he'll share it anywhere else. And it's usually pretty valuable too. It's like, if you like that kind of information, come check that out. It's worth well more than $50 a month. And I'll also tell you that $50 a month is a pittance. Our competition charges like 5-6 times that. So understand that, and this price will go up. It's based on when we get a certain amount of members, that price will go up. Now, if you do get in at $49.99, we'll grandfather you in at that price for that tier of service for the basic, and it's at this point the only tier of service we have. It will always be that price as long as you do not let your monthly membership lapse. So let's just say you wanted to get in 6 months, but it's like $100. It's going to save you a lot of money getting in early, certainly, even if you're not ready to do it. But we can't tell you what to do. We don't offer advice. So come visit us. If you have any questions, like I said, you can go to Contact Us on the website. You can hit us up on social media. All of our links are on YouTube. Much love to everybody. We are out.